What is good to you?
I would define good as meeting your own values to a high standard.
Welcome to Chasing Good, a circle group podcast with the aim to help us better understand the good that's happening in the world today. Thanks for tuning in, and I hope you enjoy. Hello, and welcome back to Chasing Good. Here with me today, I've got Alex Debney. Alex, thank you so much for joining us.
Thanks for having me on, Mike.
Mate, absolute pleasure. Now, so Alex is a very interesting background and one to which I think a lot of people could take a lot of value from. But I'd love to hear, so as we normally do, I'd love to hear a little bit more. So obviously currently an impact investment manager with Conscious Investments, which is a really incredible position to be in and which gives you a really unique insight into what's going on in the world. But can we talk a little bit about your journey to get here so far? Can you give us a bit of a run through as to, a little bit about Alex in the early years?
Yeah, sure. I'd say a big theme in my career has been exploration. So I started as an engineer, found my way in investment banking. Then I became an agricultural and infrastructure investor across Australia and Brazil before going into founding a tech startup. And with that tech startup, we were trying to lower the cost of fundraising for all not-for-profits and charities in the country and just make their processes and basically their lives and management a lot easier. Unfortunately, that failed, but I've now found myself, at Conscious Investment Management, and we're an impact investor in Australia that started 5 years ago. So it's been a pretty eclectic journey with a few other sort of driving reasons for that. I'd say, I always wanted more ownership over my outcomes. I found as a young person in my career, I was very far removed from what the outcomes actually were. I think when you're giving advice in whether it's engineering or advisory or something like that, the client is acting on that advice and you don't have a say really in that and you don't wear the outcomes of that. So for me, it was a big journey of getting closer and closer to the outcomes.
Fantastic. And mate, what a career. Engineering into investment banking, into tech startup, into impact investing. There's a few pretty significant pivots that
It looks a bit strange in on TV, I tell you what.
Yeah, no, absolutely. Okay, so can we? Interesting how you kind of referred to there the taking ownership of outcomes. That's an interesting piece. So I can imagine the connection there kind of going into the startups, but can you let's talk the transition into identifying the problem. Let's start with the startup and then kind of pivot into the investment, into impact investing. So you've identified a problem effectively within while you're doing this while you're working in investment banking. What was that core problem that you were trying to solve with the business?
Yeah, it was around 2015 in Australia, and the context personally was that I was very altruistic as a teenager and I had parents that were very supportive and helped facilitate that. And then I'd found in my career, I just moved very far from that. I'd actually been working in oil and gas advisory, minerals advisory, things like that. And I felt very far removed from that, altruistic sense of protecting environment and sustainability. And so that was a bit of a nerve that I had at the time. And then in the broader space in Australia, there are a couple of companies that I think triggered a royal commission at the time, or at least were headlines for taking huge take rates from people on the way through to charities. So what was happening is the majority of individual collection, which was going through people in the streets, people with the clipboards or the point of sale machines that hit you up outside a train station and take a donation from you. At that point in time, a lot of them weren't actually charity workers. They were outsourced from for-profit companies that on average, this independent commission found were taking about 42%. So you give $1, 42 cents immediately comes out and goes to those organizations. The remainder goes to the charity, at which point they have their own costs for running their own organization, which in many cases are legitimate, but get a really sort of pejorative focus from people. And so the ultimate dollars that were flowing through to the purpose were really, really small. And a friend of mine we were both at Macquarie at the time. I think we had that nerve I referred to earlier. We wanted to do something that was closer to making good. And I kind of convinced myself in my 20s and had a lot of conversations with people where the rhetoric was, you can become successful or make money or do whatever you need to do, and then you can give back. And I guess I just found that a little bit strange. I wanted to find a way to accelerate that to earlier in my career. And so probably very naively, we quit our jobs and started this tech startup to try and deliver a technology platform to address those issues.
Fantastic. So that's a what was the tech startup? That's incredible. It's a very real problem, and one that has actually tainted the concept of charity as a whole. A lot of people, will struggle or get angry by the concept of charity because they recognise that it's actually not going to good. It's just an intermediary which actually takes is its own economy that uses the money for its own benefit and doesn't necessarily have that, which is a real shame because the cause and the fundamental psychology behind charity is such an important thing, right? So you've built this platform, you've gone through this process of building a company, which is a bloody hard thing to do. It's startup world is difficult, and it's one thing if you're running a existing business model, but if you're trying to do something completely new in itself, again, there's additional layers of complexity around, monetization, actual adoption. It becomes a really difficult task. How did you find that journey, and how was the growth behind that?
It was really tough. So the first product we built, there's a good case study in not doing things in isolation. The first product we built back in 2015 or so was around that concept, which I've seen a few groups try to repeat, which is people at point of sale purchase something, round up to the nearest dollar, and that incremental bit of change they have can be donated to a cause. And so we thought that was a brilliant idea. We'd seen someone in the States do it, and we just decided to build that. And so two young guys going out building something in isolation is not always a good idea. So we built it, and what we found was a lot of charities would say at board or management where we could get a meeting would say, "That's great, that's awesome, let's give it a go," and then the problems would become bigger and bigger. We had to get it out to consumers, which was hard. We had to work with all the payments groups to make it work across every merchant, which we solved, but we didn't have enough money to push it out to as many consumers as possible. It was a bit like being in a marketplace without the things that you normally benefit from in a marketplace as it grows. So that product actually failed, but we had two things there. We had a lot of lessons that we learned along that journey, and a bit of resilience. And then secondly, we'd also built really deep connections with a lot of major charities. So we hadn't actually raised from external capital at this point, which was good. We just burned our own money, which was bad from a personal point of view. But we went out and met with all of those charities that we'd built strong connections with, and we asked them what they actually wanted. And it turned out it went closer back to that original problem, which was we want to be able to raise money, from individuals in the street, at galas, at our own events, and from others. And we want it to be seamless. We want to be able to build a CRM database out the back. We want it to do receipting for customers, and we want to be able to collect the money immediately without, long wait times. And so we looked into what the current solutions in the market were at the time, which was typically renting bank point of sale terminals or Square and others, and it was quite expensive and very much not bespoke for the charity world. So we went out and started building it again with our own money and built a really great product. We had a very innovative way of, I believe, of delivering the platform. So we went to the coding societies at some of Australia's top coding universities, and we spoke to the heads of the coding societies and said, "Hey, what would it cost to build this, and would you do this with us rather than going to large professional outfits?" And so for what was a lot of money for those students, but not as much as paying a large professional firm, we were able to build this great platform. We had one of the senior engineers at Airtasker and a few others come in and sort of audit the work, and the feedback was, "Hey, these young engineers are more talented than we are. They've been coding since they were kids," which was phenomenal. So we built this platform with these sort of final year students across universities and delivered it. And it was amazing. So this is August or September 2019, and it took off. We had one charity raise $3 million with it at the Spring Racing Carnival. And it was great because we would show the charities how to use the product, and then they would just go out after 1 or 2 hours of exposure to the platform, and then their team could use it, and it would just worked really well, which was a revelation to us after several years of building. So the unfortunate thing with that platform though is it was extremely leveraged to face-to-face interaction. So as you can appreciate, in a pandemic, that becomes very difficult. So unfortunately, when we hit the start of the pandemic, we ended up having, revenue went to zero, obviously, couldn't have face-to-face interaction, and we ended up returning the remaining shareholder cash and winding it down. So it's a good journey, tough journey, learned a lot, but, ultimately not successful.
What a power to you, mate. I have nothing but respect for anyone who's willing to give something a go, and that's that you've given something a red hot crack there. You've built one good product. You've identified that it's not necessarily the right market fit, and then you've built something else that's better. Found market fit, and then external environmental factors have come in. So power to you for pushing that, because it's obviously there's high levels of impact and that needs to exist still.
Yeah.
So I see it's a problem that you had to wind down. But that's, I guess, which is nice, because now we can kind of shift to the next stage of your career, funnily enough, which could potentially provide opportunities to offset such occurrences happening for other founders in the future. So you've learned, obviously you've got the investment banking, you've learned a lot about in the payment system. So finance has been the core underpinning of understanding how money flows and it works. Particularly within the not-for-profit sector has played a key role. And then and so how have you gone about stepping into investment banking? Investment impact investing, and what was the decision process behind that?
Yeah, I won't. I've got to be frank. Part of the decision process was that the startup had evaporated, but probably the bigger driver actually was that someone that I respected at the time and still respect very, very deeply, that I used to work with in banking, approached me, and his name's Matthew Tomic. He's the CEO and CIO of Conscious Investment Management, where I currently work, and he's a brilliant thinker, and he really, he'd been working at this family office in Melbourne, who very authentic, very intentional, and they wanted to invest a large amount of capital in 4 core areas, so responsible investing, and they went about trying to find places to put that capital, and really couldn't find investment products or areas that met the thresholds they were looking for. And what they were looking for were a couple of things. One was very high impact across the spectrum, so both environmental and social impact, but at the same time making market rate returns. And by doing that, you're able to grow your corpus and grow your impact over time. And that just didn't exist sort of 5 years ago at the scale that was needed in Australia. And so we set about building it. So he approached me and said, "Hey, I want to build this with you." So I, with that background of deep respect for him, came on board, and it's been an amazing journey, a really amazing journey. Back in when we first started, 2019, 2 first-time fund managers, there was a lot to learn, and for us, it was about focusing on what we knew well, which was identifying good investments, structuring them well, and what has become sort of the secret sauce of Conscious Investments is finding really mission-aligned organizations that we can work with to make the greatest impact. So what I mean by that is, we have, as you noted, investment banking, financier, that sort of background. So where we don't have really deep lived-in experience of a lot of these problems, whether it be, part of a family fleeing domestic violence or being homeless or, things like that. And so, or living with disability. So we went about identifying sectors that we thought met those criteria. So, high social or environmental impact, who are the best in class organizations in those sectors, typically charities, and typically also capital constrained. It's not easy, as I learned through that journey with that startup, for most charities to attract the capital they need to make that impact. And so by partnering with these organizations under what we call our impact partner model, we're able to take our experience, marry it with those not-for-profits and charities that are very mission aligned, and supercharge that impact. And so that's been the process over the last 5 years. Identifying sectors with great operators where there's big impact to be made, and working very hard to take as much traditional or mainstream capital as we can and shifting it into this impact area. So wind the clock forward to today, we've got an amazing team. We've pulled people from different organizations, charity organizations, as well as global investment houses like Brookfield. And then we have fantastic partners in each of our 4 major focus areas. So those are social housing, specialist disability accommodation, distributed solar or distributed energy. And then lastly, we've done a fantastic first investment in what we're calling First Nations natural capital, which I can touch on in more detail. But that's sort of a very high level summary of what we've been building with Conscious Investment Management.
Yeah, amazing. Okay, and so if we can dive into, could you explain to me how, from a impact investment perspective, you are able to find the balance of impact versus financial return, and kind of what you would look for, some key indicators you'd look for in an organization in that capacity?
Yeah, absolutely. So the starting point is that the problem is big enough and it's not being met with capital. So a great example that I touched on before is housing inaffordability. It's in the papers almost every day. And our first major investment in social housing, for example, was in Victoria, where there's a thing called a register of needs. And on the register of needs are people who are at risk of being homeless or fleeing family violence, who are in extreme need of housing quickly. And the way that it works is typically charities will have social housing and they will deliver, and people will move off the register of needs into that housing. But it's, you can see the size of the problem, where you've got nearly 70,000 people in just a single state in Australia. And so by working with charities in that space, we're able to structure a solution to bring private capital into that solution to build or deliver the housing. So in that case, it was utilising the Victorian government as well as a partner to help us bring that social housing return up to the level that private capital would require. Because historically, there's always been a gap with social housing that hasn't made sense from a returns perspective for private investors. Social housing constituent, rightly so, will contribute to rent only up to 30% of their income. And usually that will be a yield of maybe 1.5% versus a market yield of 3.5% to 4.5% for a typical residential property. So by using private capital to deliver that housing, administer the wraparound supports with that charity for the tenants and constituents, and have government support it with a payment model alongside that rental contribution, we're able to make the returns stack up for private investors while delivering impact for a large base of people who can move off the register of needs and into housing.
That's a really fantastic balance. That's the perfect example, isn't it? You've bridged that gap. Are there examples of times where it's not feasible? And I guess this is probably where we find the where the division or gap really needs to be bridged, where because you need to have, obviously people need to make money. We live in a capitalist system, and but some people are happy to not make as much money as others, and it's kind of understanding. Once we understand who those people are, it's then leveraging that capital to realign those capitals and kind of having, I guess, different connection points of capital at different levels depending on how much return that individual is happy to take versus impact. Have you considered that equation, the impact versus return, and spoken to that, or is the goal ultimately always to get maximum financial return as well as maximum benefit? Do you ever kind of compromise on either?
No, we don't. But I guess a way to shortcut the answer, and I'll explain it, is knowing our place as impact investors. Dan Pallotta, an incredible charity fundraiser out of the US, said it best, where capitalism is not a perfect system, and I'm paraphrasing probably badly here, but in capitalism, there will be a 10% or so of people that get left behind, and so there will always be a place for philanthropy, a very necessary place. And if you're an impact investor who is substituting philanthropy, I would say that's a failure. Thinking of an example at the top of my head, probably not a good one, but crisis relief. Let's say there's a major crisis. Would it be right to go into a crisis selling water at double the normal price for water to people post a cyclone? Absolutely not. That would be profiteering. Or even providing crisis relief at market rates. I think that would be taking advantage of people at the lowest point. So I would say that would be substituting philanthropy to try and make a market rate return in a way that is not ethical or moral. And so I'd say that's a failure of focusing impact investment in the wrong area. There are structured crisis financing arrangements that don't do that do make sense, but just a quick example. So we consider that equation very, very carefully, and it's about focusing on areas where we're able to balance those. As you pointed out, it is a balance. Another example, which is structural, is in distributed solar. So just by virtue of technology really, really improving over time, we're able to now co-locate energy at an asset, which structurally means that it's much lower cost. Because Australia's an amazing example. We have a really high solar resource, and typically our energy consumption is really far from our energy production. So, and that's usually coal-fired in Australia, or has historically been that. So what that means is if you took a pie chart of the energy consumption from that coal-fired generation historically, almost half of it is lost over the transmission distances, just through transmission, and then also through charges that are needed to pay for that infrastructure, those poles and wires, that network. So if you can co-locate your energy generation, which we do with solar on the rooftops of assets or next to assets, it removes about half of that consumption, which is actually just mainly loss or capital charges. So what that means is you have a pie of savings. That's how we think about it. A pie of savings that we can use to provide cheaper and more stable and renewable energy to energy consumers, and at the same time earn a rate of return that makes sense for investors to pay for that energy generation, and in many cases also incentivize landlords to allow private investors or allow groups to put big solar arrays and assets on their assets. So that's a great structural example that an impact investor can identify and focus on, because with the broad improvements in technology, it's removing a market inefficiency and providing a great impact outcome. So again, that's just another example of finding a balance where applying private capital can create a positive impact, in this case environmental, while at the same time also generating market rate financial returns.
The thing that I kind of often see, and this is possibly my fundamental issue with philanthropy as a whole, to be perfectly honest with you, is that yes, there is typically we see the polarization of wealth, which creates this level of opportunity and inequality ultimately across multiple verticals. And what philanthropy creates is an opportunity to bridge that gap, but that it bridges that gap based on an individual's perception of what needs to happen. You mentioned First Nations before. The First Nations is a great example of it's where one group of people are telling another group of people how to fix the problem, as opposed to running more of a community-based or a democratic process around how that money should be utilised. And so, yes, we want to find maximum rate of return. We want to find we want to find highest levels of impact, but it's restrictive parameters. Is there a global or national body which kind of creates a strategy around, well, this is where we're at from a this is our current state, this is our future state, and this is how impact investing can help us get there?
Yeah, there's not. There are, however, a number of groups that have brought out incredible metrics for measuring impact, and I think that's an important point to touch on. Measuring impact is essential to what we do. It's very easy to go out and say that you're making an impact. I'm sure you've come across in your podcast and your journey, the concept of greenwashing, and so being able to identify what the problem is, what outcomes you're going to change related to that problem, and any outputs or metrics related to that are over time, and then report on them transparently, is essential. And so what we have used in our journey are globally accepted systems for measuring impact, which has been very helpful. But from a perspective, you're right, it is subjective. We've had to, as an organization, define what our theory of change is relative to different sectors and impact overall, and make decisions on where we want to sit. And I guess people, in a sense, as they do with ESG investing with listed investments, they vote with their dollars. We've got a really supportive base of investors, impact investors, who have supported us by going into these different strategies and delivering these impact investment products. And that is really people showing their subjectivity. Goodness, in essence, is subjective. And so as impact investors, we have to constantly balance how we're going to deliver to an outcome and then report on it to our investor base. So that's really at the heart of it. It's using globally accepted systems to report so that we're speaking the same language, and then building our track record and capability in identifying the right impact areas and supporting them. So as investors, any investor, impact or not, probably says no to many more deals or investments than they actually make. And that's definitely true in our case. I'd say we look at hundreds of things a year, and we might make 10 investments in a year maximum. And so there's a lot that we say no to on an impact basis. To answer your question, Mike, it's very subjective.
Interesting. And so those, I'm curious, because we've also got the Sustainable Development Goals, obviously, from a United Nations perspective. Do you kind of have any alignment to that, or is that something that you kind of cross-reference with in general?
We do. It was a big guiding light, I guess, when we started and we're looking at what sectors to begin in. It is by virtue of needing to be very general, but they are great for again speaking the same language with impact investors. And so when we were doing almost like a triage process when we started SIM, of looking at lots of different sectors and trying to identify those sectors with, I spoke about mission-aligned operators and the right balance between the ability to make returns and make really high impact that we can measure. We were able to tie those back as a starting point to the UN Sustainable Development Goals, and that was helpful. What we've done subsequently is go down a route of then working out which reporting metrics we need to use. So, we use the GIN IRIS Plus metrics around specific outputs in our reporting. And at the same time, we use the impact management plan, which has just been renamed, to help look at the different dimensions of our impact from the perspective of what outcomes we're delivering. So we've actually released our third impact point on that, around that, Mike. So our first impact report was a huge journey for us 3 years ago of, stepping from that world of talking at the UN Sustainable Development Goals level to those globally accepted frameworks around measurement and showing that we can actually measure specific impact in a really transparent way across our investments, and then putting that out to the market, to our investors in the broader market. And so since then we've iterated and grown that reporting, and it's something that we're actually very proud of as an organization. So it does tie back to the UN Sustainable Development Goals, but we've had to become a lot more specific over time because that's just been the natural evolution of the space, as it should be. The reporting on impact over time will become as good as the reporting on financial outcomes, and that's really what it should be.
Absolutely. The impact reporting piece is very fascinating. and tricky because, you know, the intangible ripple effects of, you know, impact, how deep you go, you know, like what, as an example, right, you know, the positive impact of a smile, right? How far can a smile go? That's those kind of things really fascinate me. It's obviously not necessarily tangible or traceable for the moment that we're aware of. We'll see how far we can get, as you say. But looking at, I guess, from a financial perspective, are you able to give kind of examples of key metrics or key indicators that you would typically look at to say this has been a successful piece of impact?
Yeah, for sure. So a starting point too is understanding who our investor base is. And that's gone into everything that we've structured. So one of the key groups that we were structuring for from day one has been foundations. So publicly, you can see that Paul Ramsey Foundation has been one of our biggest supporters. They're an incredible organisation that supports, fosters, and develops a huge amount of impact, you know, around Australia. And in designing investments that work for them, one thing was front of mind for us, which is a lot of foundations, they have a pool of capital, which they obviously make disbursements from to deliver on, you know, their philanthropic initiatives. But in many foundations' cases, not specifically them, but just generally, foundations will have that invested in things that aren't actually aligned with their corpus. You know, they might just be invested in regular stocks or private credit or infrastructure, or in some cases, oil or gas or all sorts of other things. And so we thought, well, you know, why can't impact investing help address that side as well? You know, a lot of foundations are doing fantastic work on the philanthropic side, but on this pool of capital that's invested elsewhere side, if that can be invested in impact too, it supercharges the overall picture. And what those foundations really need is high cash flow generation. So under Australian tax law, they have to disburse a certain amount each year to maintain their charitable tax status, Mike. And so for us, one of the key metrics from a financial standpoint is, are we making enough cash flow on an ongoing basis for our investors that if, say, a foundation investor is there, that they're able to maintain the size of their corpus or grow it? So in simple math terms, if they're disbursing 5% a year, can we make sure they're earning 6 or 7% each year in cash? So from a financial standpoint, that's, you know, the type of metrics we'll think about, you know, biased towards high cash flow yield. From an impact perspective, we're really thinking about, are we, you know, creating the most positive impact and actively contributing to change? And that's really where that IMP methodology will come in. And so when you're going through the different dimensions of impact, you're really trying to get to the point where you're actively creating impact versus influencing change. And so for us, it's around the scale of the impact, where is it focused, the scale of it, the longevity of it, and the fact that and that you're able to maintain it over the full life of the investment. Because typically we're investing for really long periods, 20, in some cases even 25 years. And are you able to maintain the positive impact over that very long-term investment horizon? So very different perspectives from a typical or traditional investor.
Yeah, absolutely. It's a it's funny. I had completely not considered the other side of kind of the asset management piece that you also do can do for charities. You mentioned the greenwashing before, which I'd like to kind of touch on, which is obviously a problem, and it's a problem that's really only going to get fixed by regulation, in my opinion, at this stage, or by other companies promoting best practice and you know, letting the free market determine. But can you talk to me about, you know, what the fundamental issues are within greenwashing and what you see as some potential solutions there?
Yeah, skipping straight to a solution for a second, because you've touched on it. You know, you've had task force related financial and then now climate related disclosures come out, and so companies are now having to actively report on what they're doing in this space. So I think that the solution is coming out now, and how well companies address those changes will dictate how well they fare in that sort of impact reporting or greenwashing arena. It's, you know, touching on impact versus ESG. So from an impact perspective, we have nowhere to hide, so to speak, because our capital is directly making a change. That's the intended intent of the capital or the investment, and you're reporting on that change. Where space for for greenwashing comes up is a lot more in the ESG sphere, which is where capital is going to a company, usually as a small or minority investor in a listed sense. So you might be 0.1% of a large listed corporate as an investor. So you don't have the ability to really heavily influence them. A lot of investors acting in concert can, as ESGs, effectively voting with their dollar as ESG investors. And what it comes down to is both the visibility and the action that a corporate is providing around their impact. Because where greenwashing becomes an issue is where organizations report without the underlying action around scope 1, 2, and 3 emissions. I personally am part of a thing called the Climate Leaders Coalition in Australia, and I can actively say that corporates are putting enormous focus from the CEO board levels down into scoping out what changes need to be made and implementing them. Because it's not easy. You have both the direct interventions you make in your business. If you have a major supply chain or property portfolio, it's a huge piece of work alone. But then you also have your supply chains, where you get your energy, and in those cases you're having to influence the world outside your own organization to deliver on your sustainability goals. It's not an easy thing to do, and so I think a lot of greenwashing has naturally, got to be careful what I say here, has naturally occurred because it's been so new, this level of reporting, and it's very hard to go from that sort of reporting, putting it into action for some of the reasons I spoke about. But what you are seeing is much better reporting and regulation coming out that's going to push corporates to report really transparently, on a level very similar to how we report in impact investing, where there's effectively nowhere to hide, which is the way it should be around impact.
Absolutely. It's funny, the regulation piece. I reading Sacred Economy at the moment, which I'm finding very interesting, and it refers to the evolution of money within, I guess, in the sphere of human evolution, and how it's actually money is actually a very natural thing that's kind of generated from giving, and talks to the great awakening of human beings happening in the kind of 70s, and we as a civilization economically are more or less teenagers, and the monetary policy and the systems that we've had in the past are, created in their infancy, and we're going through that developmental stage, because now we have the care for the earth, and so we have to change everything, including our financial policy and the regulation that controls it to adapt and working with these changes, and this. These pieces of regulation and kind of hearing that it is happening from the top down with these organisations is part of that process, and it's fantastic to hear. Do you, out of curiosity, and this is possibly a bit of a cynic in me, which isn't necessarily something I typically adhere to, but do you think it's because of the general public perception? Are people changing because they want to, or are they changing because they want to look like they are?
I oscillate between being an ebullient optimist and a cynic myself, Mike. So I often wonder the same thing. There was when we started that charity tech platform, there was a lot of amazing work that had gone into why people give, and I think it's a very good proxy, because some of the biggest reasons that people give are because they want to be seen to be generous. For others, it's because this is a more optimistic than cynic outcome, is people actually get a release of positive hormones effectively when you give as well. So I think there's a mixture. I don't think it's a simple answer. I think a lot of people want to be seen to be generous and do it because they have to, but a lot of giving and kindness unfortunately comes as a secondary or tertiary thing for people. I think a lot of people are struggling. Inequality is increasing in virtually every country in the world. It's really challenging. And we have things that take us out of our present constantly. I spend a lot of time trying to make sure I get out of, the dopamine trap of my phone or social media or other things, but they're sexy, they're hard to get out of. And a lot of people are caught in those things. A lot of people don't understand how to define their own purpose. It took me many years to understand how to think about purpose for myself. I'm not saying it's the right way, but that's the level I think a lot of us are in. And then working out how to give back and to be kind sometimes comes as a secondary factor. So I think it's a complicated answer. I don't have a clear answer on it, but I think there is inherent goodness in everyone. That's what the positive optimist in me says.
Yeah, fantastic. And look, I tend to agree. It's interesting you've referenced that piece about, everyone's going through stuff, and it's almost more relevant now. The fact that, again, everyone is like, there is, okay, you and I sitting here, sitting in incredibly privileged positions, having this conversation in the, top percentage of the world of being fortunate and privilege, but we still have day-to-day struggles. And then there's even the highest, even the kind of the 0.00001% of people in the world, they're not necessarily happy either. So if you have the whole spectrum of the population not seeing or finding happiness based within our current monetary system and seeking that change elsewhere within their own businesses or within their own lives or within their own purposes or within their own families, I believe also that it is absolutely cause for change, and it's action-based change that I think we are seeing the start of, and we'll continue to see compounding effects of. I'd love to hear. Obviously, the podcast is called Chasing Good, and I feel like this is a nice segue because you've referenced goodness a little bit here. And you've got a fantastic context of what it means to be good, and you've had a journey. You've worked in your own tech startup to help make positive impact. You've been impact investing, making incredible positive impact there, and facilitating that change on a larger scale too. What is good to you?
Good is a word that I find has false precision around it. If you ask anyone what good means to them, they'd give you, they very strongly believe they know what it means and give you an answer. And I guarantee that almost everyone's answer will be a little bit different. I think there's that false definitional precision. One person's good is very much another person's evil, and that's why we have things like conflict. So my starting point with good is it's subjective, but why is it subjective? I believe it's subjective because of people's value sets. So, whether I'm starting a relationship with someone, going to business with them, or starting a new friendship, or whatever it might be, I spend a lot of time and mental focus trying to understand what their value set is, and is it aligned with my value set? And so, from my perspective, good is that you are, or a person is, living to their value set to a high standard. I think bad is if you're failing your own value set. So I would define good as meeting your own values to a high standard.
And what do you mean by high standard?
It's easy, to your earlier point around people want to be seen to be good. It's easy to be good when people are watching. What's an example? The simplest one I can think of? Do you pick up the piece of plastic when you're walking by yourself in the park? Does someone do that when no one's watching? And so for me, it's about having a set of values that I can live throughout my life. And I fail at this constantly, right? But trying to have that self-awareness that these are my values, and then living them whether someone else is watching or not. And for me, I spend I spent years agonizing over what my purpose and my passion is. I've had to come up with, you know, for two reasons. Like probably, the two reasons where I really struggled is number one, I would agonize over, you know, whether I'm on the right path. And it's really hard because you're trying to predict, if I apply time and effort and focus to this thing, which as you can tell from my career we spoke about was many different things, I would agonize over whether it was the right choice. And so there's inherent uncertainty in whether you're on, following your purpose or chasing your passion. And the second point, which is a bit more nuanced, is you're not equipped today to actually understand whether your future self will like a thing. Let's say you go, I want to become a professional kite surfer. Probably very far from being able to do that, but I don't believe I would enjoy that today. But if I spent 5 years, 10 years grinding at it and actually enjoyed the grind, and then got to the point where that was the outcome, I'd be a different person. And by then, that future self might actually enjoy it. But who you are today isn't equipped to know if you're going to enjoy the outcomes of following your purpose for a long time. I've always envied people. I've got friends from a young age, usually musicians or athletes, who have had defined a singular purpose for themselves at a young age. And I was always so envious of this, where it's like, I'm going to become an AFL footballer, I'm going to do this, and that's brilliant because they have this path to follow. I didn't have that, and so I've had to come up with an approach for me that helped me identify where to put my time, and then how to align it with my value set. And so for me, it was stepping out of the future, really being in the present, and the mechanism really is, am I indulging my curiosity? Am I curious about a thing? And if I'm curious, just keep following it. It's like pulling a loose thread. It's unrealistic to expect that you're going to be curious about everything, like doing taxes, for example. But what drew me towards starting co-founding that tech startup, and Conscious Investments, is I'm curious about the impact that we can have on other people's lives. I'm curious about how we can grow organizations rapidly. I'm curious about what it's like to work with really talented people. I'm curious about investing. And just following that curiosity in the present moment has been helpful, because it's a lot easier than questioning, am I on the right path in terms of my life's purpose, which is just so hard to know. So a bit of a tangent, but I think that's a big journey I've been on to get to where I am today. And now I'm able to indulge my curiosity and live by a value set, and that's how I think I'm able to judge whether I'm being good or bad.
Did you identify the values? Have you kind of identified a list of values that are, key for yourself? And have you potentially used those values as kind of decision-making metrics in other areas of your life?
Yeah, I have. I'm laughing because listing values or virtues sounds a bit wanky. So, but I guess I have. I've got.
Not at all.
I guess I'm gonna have to do it now.
Just to kind of give a bit of context, right? Like, I understand, recognizing that objectively what you're putting out into the world is greater than what you're taking out from it. So the whole purpose of this podcast is to identify the real reason behind good. As you mentioned before, it's subjective, right? But so we take all of the subjective answers and we collate them and we create a unified data evidenced or data backed answer to the question. And then we find out how good people are living and how you see the world, what makes you make these decisions. And so, understanding your values isn't necessarily something that might be comfortable, but these are things, you're the kind of person that people need to learn from. And so that's why I think it's important to ask these kind of questions.
I think that's very kind of you to say, Mike, but maybe my mistakes might be better to learn from, because I made plenty. So my 6 values that I try to live by are wisdom, humility, authenticity, courage, kindness, and discipline. And I feel like I am good if I am living by those values in small decisions and in big ones. Are we allowed to ask what your definition of good is?
Yeah, no, no, you can. So there is no outcome. I believe that good is constantly evolving, and I think we're in a bit of a global shift at the moment as around what good is, and that's part of this podcast. So my definition of good evolves daily. Um, I believe that it is a action based. It is an action based belief system where you live similar to what you've said, kind of in line with your values, um, but you allow but those values lift yourself, um, you lift your family, lift the community outside. Ideally, you're able to lift make positive impact to the local economy, to the local environment, um, to the local community, to the civilization as a whole. Um, it it's it's ultimately lifting the standard is is what
Yeah.
I'm finding myself to lean towards as a definition so far. Um, However, again, I hear your answer, like aligning with values. Um, that is a consistent thing. The most consistent answer that we've had so far on the podcast has been kindness to self. So that is in reference to good. The most common theme that's been brought up across the board is uh, like you got to be kind to yourself before you can be kind to anyone else, which is also really
Yeah.
in reference to that next level of um, you know evolution and the inner journey. What was it? Socrates, I believe his quote says, um, I'm gonna paraphrase it and I'm gonna butcher it, but it's something along the lines of um, one would be a fool to educate the mind without educating the heart. And I think these kind of inward journeys are very, very important as we take steps to make impact outwardly, particularly if you are actually taking steps. You have a moral obligation to the rest of the world to sort your own shit out if you're going to try and make change in the
Yeah.
community,
No,
I think.
I really agree. It's that kind of when your cup's full, you can spill over and support others. And I think that's what, having heard you articulate it so well, I think that's what I was driving at with that, that story around how I had to get comfortable in my own mind about how I was applying myself. It took many years because there was a lot of going around in these vicious internal mental cycles of self-doubt, self-loathing, all sorts of things around where I was applying myself, what my purpose is, and other stuff. And so I had to go through that journey before I could be in a position where now I feel like I'm starting to give back a little bit. So what
Mm.
you said really resonates, and I think it's an interesting facet that I'm thinking about adding to my value set, or to the concept of good. That it's about also how you lift others up and everything around you. It's a good point.
Yeah, well, and look, and as I said, it's evolving, and I'm constantly learning. But I think that's the iterative nature of the society which we live in, and the constant development. I think we have to be open to constant change. Need to be able to learn again, think again, adapt and change with every single, um, with every single bend and turn, and that might mean reevaluating what good is. and so here we are. But where do you see the world going to? Do you see a compounding effect of good? What kind of, based on the current trajectory that you're seeing logically, where do you foresee us moving towards? If you could predict the future right now.
Yeah. Going back to that balance of cynic and optimist, it's really easy to become quite pessimistic or cynical about where the world's going. I myself have done a lot of that. I mean, if you look at the typical mainstream news cycle, it is all doom and gloom, and partially that's where they need to report. But it is a lot, and we have some terrible conflicts going on globally now. But if you do, what I try to do when something scares me, like global conflict or AI is another example, I go and I engage with the data to understand if there's a real reason to worry or to be pessimistic. If you look at conflict, you know, notwithstanding the horrific circumstances happening in a number of conflicts now, it is steadily decreasing on a global per capita level. You know, it has been for the last several hundred years. So global conflict is decreasing. You know, there are still many live conflicts in North Africa, Myanmar, the Middle East, Ukraine, others, but they are decreasing per population as it's growing. So that takes me from a pessimistic mindset to a slightly neutral or slightly optimistic mindset around that. I think besides conflict, two things that do really worry me are inequality and how it ties in with AI and technology. I do believe that, you know, AI is actually ultimately good for us, but I think it's going to be very painful for a lot of people in a lot of sectors along that journey. It's like how when the Gutenberg Bible or press came out, it created massive civil unrest across Europe. There's a lot of parallels between that people have made between that and the internet. And similarly, when new technology comes out that is really transformative, there are groups that suffer. So it's going to become it's already an incredibly connected world, very complex world, one in which we aren't always given the tools at a young age to navigate well. And I see that, you know, and I think it's going to get probably difficult before it gets better. Where I do gain enormous excitement is when I speak to young people. You know, I still sort of semi-count myself as young, but when I speak to young people, they're so optimistic about the world. You know, I feel like I'm getting in touch with my own inner child when I speak to them and remembering that optimism, that altruism that I used to have as a teenager. A lot of schools, you know, in Australia are teaching mindfulness now. You know, mindfulness is a new practice for me. I absolutely love it. And I imagine how well equipped these kids are going to be for how much more complex the world is becoming. So that's what gives me hope, you know, speaking to young people. So I'd say I'm on the side of being an optimist, but with a lot of careful navigation of complex evolving technology coming.
Yes. Complex evolving technology is it's an absolute navigation. No, it's absolutely a piece to navigate. And I think you answered that wonderfully, and I completely agree. Looking at the way that things are moving, we didn't have impact. Let's look objectively at the industry of impact investing, right? That didn't exist 5 years ago, right? In 5 years' time, you're going to have 6 competitors who are bloody good at their job, who are doing things very well, innovatively. We're going to see competition in impact generate and set standards. We can't see and if we can maintain strong levels of regulation within that, within the impact and greenwashing, and make sure people can't take the piss, we're going to see the compounding effect of impact over time. It can't not happen. And that all we need to do is just slowly move the needle. And then the needle will start to move faster and faster and faster, and we might find a sustainable pace. But I think, you know, the inner teenager of you being hopeful, or being optimistic, I think is actually wise, because if you don't have hope, what else do you have? You know, I think it's given everything given everything that, you know, you're doing and the action you're taking, of course you're going to believe that. Mate, look, I have really enjoyed this chat. I've gotten a lot from it. From the bottom of my heart, I applaud you for everything that you've done. I applaud you for taking the steps to find your own journey, and then taking those the skills you've learnt from that journey to try and make something bigger than yourself and make positive impact in the world. I applaud you for failing, per se. I don't believe in failure personally, but I applaud you for, learning, and taking those learnings with you into making this next, into moving into impact investment, investing and balancing that, financial return to impact, which is not easy. I'm very sure. And thank you for everything that you do in the world, mate. It's important that people hear stories like yours and see that there's different ways to learn and achieve and grow within life than traditional career pathways that can do more for other people, which is exactly what you've done at scale, which is bloody impressive. So power to you, mate.
Well, thank you, and power to you too, Mike. The number of people I know that have told me they want to start a podcast and haven't, or have started ones in the space of longevity or crypto. There's a lot of those. So starting a podcast around a topic that we need to be talking about is really commendable, and you've got a real talent for it. So I really appreciate you having me on today and having such a wide-ranging discussion. Thank you.
Thanks so much, mate. Pleasure. Thanks so much for listening to Chasing Good, a Circle Group podcast. Our mission is to shift the world closer to kindness, sustainability, awareness, and action. We hope you enjoyed. Until next time.